Hello there. Thank you for joining me. You're watching Be the Boss of Your Money. I'm Mitch Goldberg, your happy host. And today we're going to talk about a couple of things. Finally, a somewhat decent down day. When I say decent, you're like, what do you call that? Decent? It's a down day. How do you call that decent? I mean, like, at least, if we're going to have a down day, let's have like a seriously down day. But in the world of down days, it's still not that big of a deal. We'll go through the numbers in a moment, but suffice it to say, this is this has been a pretty tame year as far as stock market volatility, big ups and big downs. This has been a very, very gentle year. I mean, we just haven't seen a lot of, big up and down action today in the market. We'll talk about some of the after market stocks. These are big. These are going to be determinants for the next quarter. So I don't like to focus too much on the short term trading, but I do think we've got a couple of bellwether stocks to look at that should help markets possibly for the rest of the year. That's how significant these earnings announcements are after the close today, in particular, Microsoft and Alphabet. And I just want to talk quickly about a backdoor Roth IRA. You can still do those. A lot of people don't know what they are, how they work. So let's get into the show. We'll talk about some important things. Here's the intro. Stick around while you're watching, whether from the live or the replay. If you have a question, ask me in the comments. I love hearing from you. Question about money, finance, IRAs, planning, investing. You have questions you should ask. I'm here. You have my attention. Ask me. I'm giving you the advice. Over 30 years of knowledge in this industry right here, like 33 years, if you want to be specific. Yeah, I am that old now. And I don't feel that old. I don't feel old. I'm just like acknowledging I've been doing this a long time and I love the business. It's changed for the better, so I still enjoy it. Oh yeah, and if you could give us a thumbs up, a heart emoji, a wow, whatever reaction is available to you, depending on which social media platform you're watching on. Let's get into the show, and here we go. First, just a quick sip of coffee, if you will. I have not had my afternoon fill of caffeine yet. I know it's almost 5 already, but I filled up this whole cup of coffee and I put it down and I never finished it. Let's just get into it first and foremost, okay? First and foremost, Dow down about 345 points. NASDAQ down almost 2%, down 238 points. I go by the percentages. I'll go like, 238 points. I mean, keep in mind, it's an index. It's almost 12,000, okay? S&P 500 off 65. And as usual, the NASDAQ would be down the most, the S&P down in the middle, and the Dow down the least. Of course, for the year, the Dow is up the least, S&P is in the middle, and NASDAQ is up the most. NASDAQ is dominated by technology. So when technology stocks are doing well, NASDAQ outperforms. And since the Dow has a smaller slug of tech stocks than the S&P and the NASDAQ, the Dow would underperform in those particular days, on those days. You can't invest directly into an index, but you could invest into a security that tracks or mimics an index. Boom. All right. So that's why. So S&P has a good chunk of technology as well, but not as much as NASDAQ. Gold, it's been hovering around 2,000, so it's been steady at about 2,000 per ounce. Oil has really been coming in. Have you noticed that? Like we had that initial spike. Well, first when Silicon Valley Bank blew up, okay, oil tanked and went down to like 66. Then it went up to 82 when OPEC, like 2 weeks ago, said that they're going to cut daily production by up to 1.1 million barrels per day. And now it's back down to 77. At the very least, you should stop seeing price at the pumps from going up. It should stop going up. It should actually start going down already. There's such a lag, though. And, it does seem like it goes up quicker than it goes down. Anyway, 10-year yield in the 3.3s. That's a 3.3%, well, 3.39, but still 3.3, the first two numbers. That yield was just 3.6. That's come down quite a bit Is it an indication that inflation is under control and has peaked, or is it an indication that we are heading into the crapper, into a recession? The economy is just done for. Only time will tell. I'm not going by extremes, though. I'm not going by, oh, the economy is over. We could have a slowdown. We could have a mild recession. That's the base case for now. The VIX up to 18 and change. That makes sense, up 11%. That makes a lot of sense on a day when the Dow is down 300 something points and the S&P is off about 1.6%. So it does make sense, but I'm not really jumping out of my seat over that. Let's take a look at some bellwethers. UPS. UPS is down just about $20 a share today. Okay. Down 10%. That is a big, big drop for a company the size of UPS. Their market cap, $150 billion. So they lost almost, a little over $15 billion in market cap. That is such a big deal. But the dividend, look at that. The dividend is not far from 4%. And just real quick, how do you handle a stock like this? UPS is a very popular stock, very widely owned, and it's a bellwether. I mean, I think UPS has a pretty good handle on how the global economy is doing, especially the U.S. economy, because how many things do you own and do you buy all the time online that have been moved by the giant logistics company, UPS? What can Brown do for you? And there was something today I noticed on actionalertsplus.com. Let me make this a little bigger so you can see it. This is why I'm getting rid of the service, not because of UPS, but they're moving their target to a sell on UPS, and any strength they want to sell. Okay, and that's what it is. Where does it say that? It's it says it in this report. UPS shares our plan is to work our way out of them using near-term strength to limit the impact of doing so on the portfolio. Really, like your portfolio is like the portfolio of actionalertsplus.com, Jim Cramer. It's not nearly big enough to impact the market or the stock. Not even close. But what do you do with a stock like that? Okay, so I just want you to know that I'm not knocking the man. I think he's terrific, and I'm a fan. But Jim Cramer, you have to know, on CNBC is really, to me, he's more of a trader. He's riding stocks up a little, takes a little off, rides them down, gets out of them, buys a little more or whatever. My goal, and everyone's different, and we're all entitled to have our style. But my goal is my goal with the stock that I buy for myself, for my clients, is I'm looking at minimum. I mean, the absolute minimum is 5 years out. I don't want to be in a stock because I want it to go up like 10, 20% and start to scale out of it. I want to be in a stock that I can make a lot of money on. UPS is a great company. And when it takes a hit like this, I look at it more of an opportunity when a blue chip takes a hit. Now, they've got some logistical stuff. They've got some things, expenses that they have to get under control. But these things will pass, okay? Brother Carlos, you're out there. I see you. Let that 10-year keep coming down. I'm buying a house. Good for you, buddy. We need to get those mortgage rates down. I'd love to see those mortgage rates below 6, And the Wall Street Journal had a story today about the drop in diesel prices, down 50% over the past year. No wonder UPS dropped 10%. I love your work, buddy. Thank you very much, man. Hey, Carlos, I love you, buddy. Right there, man. How about this? I know you're laughing right now. What movie is that from? The Wolf of Wall Street, right? Matthew McConaughey in that scene, right? I'm having so much fun. So I don't really look at UPS like, oh, this is a disaster. I look at it like, here's an opportunity to get a blue chip stock on a bad quarter. Maybe not this one, but that's why I look at blue chips in general. Like, I don't want to be giving specific buy and sell recs on this show because I want to get to know you first on a personal basis. I believe very strongly with every fiber of my being. I believe this. There was a right investment portfolio and a right financial plan for everyone. And if you have trouble finding the one that's right for you, that's where I come into the picture. Reach out to me, check me out, clientfirststrategy.com, and I can help you with that. That's what I do. That's a good reason for us to talk, to have a one-on-one and get you on your way, help you put your dollars to work, help you maximize potential. I have to say, help you potentially maximize your financial potential so that one day you could retire in the best shape that you could. I'm not promising that if you don't have any money saved up for retirement, you're going to retire well. I'm just suggesting that what you have, we want to maximize. So we have to talk about that. So call. And Carlos says, ha. Well, I say, ha, ha. And you say, hallelujah, brother. There is a plan for everyone. Amen, brother. Woo. Yes. I am just like so distracted today. I'm like this every day, actually. Who am I kidding? Natalie's shaking your head now like, yeah, you are. But let's take a look at some aftermarket. Well, let's take a look at why the market went down on a stock-specific basis. Can you all see that? You want me to make that a little bigger? All right. Microsoft was down over $6 a share today. And since Microsoft is a higher price for the Dow, 275, not the highest price stock, but see, the Dow goes by the price of the stocks, not by the size of the company. Okay. Remember, it's not the size of the company. It's the price of the stock. So goofy. So Microsoft down 6, Home Depot down 5, Caterpillar down 4, Goldman Sachs down over 4, American Express down 4. Doesn't matter the percentage that they're down. It just matters how many points they're down. In the S&P 500, it matters how much a stock is down percentage-wise, but we go by points on the Dow, which is why, okay, just figure this out, right? Which is why we quote the Dow in terms of up or down in points, and why we quote the S&P 500 up or down in percentage terms, because we view the components based on how they impact the index of the Dow components in terms of points. So we don't look at a stock and a $100 stock goes down 5%. We don't say it's down 5%. If it's a Dow stock, we say it's down 5 points. But if it's impacting the S&P 500, we say it's down 5%. There's a difference. So the Dow goes by how many points a price of a stock falls, and the S&P 500 goes by percentage. There is a difference, and it's a mighty fine difference. Okay, it's a mighty fine difference. All right. Caterpillar, Boeing. But if you see how much these stocks are down, and at the bottom here, United Health was up $3. Probably United Health is the biggest impact on the Dow Jones index because it's almost $500 a share. It's a much bigger impact on the Dow than, let's say, Apple, because Apple's only $162 a share. But if we're talking about the S&P, Apple has the biggest impact of any stock in the S&P 500 because it's the biggest company. But that doesn't matter for the Dow. Boom. Okay, I said it. So let's just get into that. That's why the Dow was down. UPS is off a little bit more aftermarket trading. Let this one settle in. And I think, you have to see if you want to buy it. But when these brand name companies finally get a hit, that's when I start to get interested in them. It's not that I want to sell it because it could go a little lower or I have to wait a year for things to turn around. A year is nothing. And one good quarter, the stock could go right back up. I mean, that's how it works. So let's take a look at aftermarket trading. So Microsoft, I said, was off a little over 6 points. It helped bring the Dow down over 300 points. Now it's up over 12 points in aftermarket trading. They had a blowout quarter, super quarter, just a really, really good quarter. So see down $6 over here in regular trading, but it's up 12 buckaroos in aftermarket trading. Alphabet was down 2. I have to say this one more time. Alphabet used to be called Google. Now Google is simply a division of Alphabet. It's Alphabet that we go by. That's up $3, over 3%. Aftermarket trading. At Chipotle Mexican Grill, they really have a lot of gas in the tank. Okay. Chipotle up $135 a share, up over 7.5%. And the last one that I wanted to, so these three stocks here alone bode well for tomorrow. Visa looks like it was a good number also, and the earnings just came out. And let's just take a look at one more. First Republic. First Republic was down 50% in value today. Now, if you look over here to the right, its year high is 171. It's $8. Yesterday it was 16, and people were like, "Oh, I bet you they were a pretty good buy. The earnings are going to come out, they stabilize, and boom, you just lost half your money in the stock." Oh, that's why I don't buy falling knives. I don't buy them. I don't buy companies that aren't healthy and in good shape. And they came out, they lost like 50% of their customer deposits. They're going to need to raise a lot more money, sell themselves, go out of business. But this is not a healthy bank where they're going to have to shrink their balance sheet because, you have to your assets have to match your deposits in some way, but they don't have that. Okay. So let's see who else is out there. Hi, Dad. I love you. I love you too, Jesse, my daughter. Anthony, wasn't Rome the first republic? Oh, yes, good one, Anthony. Yes, the first republic. Yeah, that was good. That was good. How did that work out? Not very well, okay, but it did stay pretty good for a long time. And I got a hello from Zach. Okay, Zach. By the way, if you parked in my driveway and your car is still leaking engine oil, and transmission fluid, you are ruining my driveway, so please put your car in the street. Thank you very much. Public announcement. So that is it for today. Oh, I said I would talk about a backdoor Roth IRA, and it's important. Let's say you're invested in a 401k plan. Or let's say if at this end also your income is above the threshold that allows you to put money into a Roth IRA for an individual file. It's like in the 130,000s, if I recall. Maybe 230 or 220 for a joint for a joint. That'd be expensive joint for a joint couple. Did I just say that out loud? Last week was 420, April 20th birthday. It's not today. You know what's on my mind? Okay. I'm really getting a lot of use out of that button. So the laugh track button. I have other buttons here too. Here's one. You ready? Wake up, everybody. Mitch is in the house. So what was it? Oh, yeah. We were talking about pot stocks. Oh, yeah. Roth IRAs. I'm really tired. Could you tell? Backdoor Roth IRAs. You could do is you could open up, put money into an IRA. Okay, $6,500 for 2023, $7,500 if you're 50 and over. And you just don't deduct it. Like, you put money into an IRA and you take that as a tax deduction. So if your income is $50,000, you put $6,500 into that, you're into the IRA, it drops your income down. You deduct it from your income. That's why it's tax deductible. And then your income really goes down to your adjusted gross income. Okay, we'd go down to 53,500. But instead, put the money to the IRA, don't deduct it. And then you could just flip that money right into the Roth IRA. There's no income limit, by the way, to convert money in an IRA into a Roth IRA. And boom, you've got yourself a Roth IRA contribution through the back door. You could even do this if you participate in a 401k plan. Just make sure you check with your CPA. I'm not an accountant. I don't give tax advice, and rightfully so, okay? Let your accountant give you the tax advice. I'll do the investment thing and the financial planning thing. Now, there are some rules if you have a 401k plan. Maybe it's not all permissible. You have to check. However, if you're participating in a simple IRA, a SEP IRA, or just a traditional IRA, the most you could put into an IRA for this year is $6,500 if you're under 50. $7,500 if you're 50 and over. But so if you're already contributing that much into a Roth to a simple IRA or a SEP IRA, or you just a traditional IRA, you can't do it. This is not for people already contributing money into an IRA. It's really for people who can make a non-tax deductible IRA contribution regardless of their income, and then they flip it into the Roth IRA. It's a gift for people who make a lot of money, who have extra money to put away. That's really what it is. But it's a helpful tool. And God damn it, if I can find an opportunity for you to help you save and invest and get better prepared financially for retirement, I'm going to do it. I'm going to help you out that way. That's the end of the show, guys. I so greatly appreciate you taking the time to watch. Oh, more comments. Best performing sector by end of year. And love you, brother. You're the best. You're the best. We have to get together soon, okay? All right. Best performing sector of the year. This is such a tough one. It's like I'm so tempted to say technology because it's the best performing sector right now, and it's just like such recency bias. But I'm not going to go by that. I'm going to go by industrials. I'll say industrials because my favorite stocks, the stocks that I think are going to be the biggest long-term winners from now going forward by the end of this decade, are in the industrial space. And I think it's always a problem to run out and gobble up the last bull market's biggest winners as if they're going to have a repeat performance in the new bull market. It doesn't happen that way, not in my experience in over 30 years of doing this. So I'm going with industrials. Damn it, Anthony, you put me on the spot, but that's what you do, and you bring out the best in all of us. I'll see you guys tomorrow. Thanks again for watching, and have a good night. Bye.